Hello, friends. Welcome to another episode of Investing Right. We have seen how to invest in market through various instruments, mutual funds, ETFs, and that sort. I have done a video discussing how ETFs are a unique instrument which can give you good returns with a lesser expense ratio. Mutual funds are also good. However, ETFs doesn't have a fund manager, so that cost advantage you will get. However, don't think that since there is no fund manager, they are going to pick some wrong stocks. These are picked by SEBI and create an index. So it follows a benchmark index, which will be consisting of good stocks over there. It's automatically getting selected to your ETF. That way, you can be sure that the human error or emotional attachment to a stock and all won't be there when in the case of ETF. In the past, I have done videos explaining the benefits of ETFs, the best ETFs. So these days, I want to continue that story again. There are some ETFs which are still looking extremely good. For example, PSUBNKBEES. PSUBNKBEES consist of the PSU banks what we have. So all of them, most of them are looking good at this point. Starting with the leader, State Bank of India, Union Bank, Punjab National Bank, Bank of Baroda, Canara Bank, IDBI Bank, all of them are good in various ways. IDBI Bank because of its divestment, SBI because of the deposit insurance reduction what is done by RBI of late. All these things have made the PSU banking lot one of the best stock pick. And you can either buy each of them individually or you can use the ETF, PSU BankBees, which is Nippon India PSU banking ETF, which consists of all these banks, and 33% of ETF is SBI, 33%. That means when you put 1 lakh into this ETF, 33,000 goes to SBI, the leader. So I feel that these stocks get a good winning point and they will do well in the next 2-3 years. SBI being the leader and the subsidiary wealth and proposed IPOs of its general insurance, which may come anytime soon, always money to be made in PSU banks, especially because their PE ratios on an average is 5. In the case of SBI, it is 9. And they have a 3% dividend yield. That means if you are investing 1 lakh rupees, 3,000 will come back to you year on year. And their prices are such low that they are trading below their book value. What is book value? If the company is stopping operations today, each share should be getting that much value, that much of book value, right? But the current market price is less than the book value. So it makes sense to buy at these levels. So I think they will do extremely well in the next 2-3 years. SBI, the leader SBI. The next ETF I want to discuss is the metal. Metal stocks are doing extremely well these days. Most of the stocks, whether it is copper, zinc, steel, everything is doing well. And we have Hindustan Copper, which is in the copper field, right? So it's a PSU company. I had earlier given view that Hindustan Copper, which was at 100, can even double in 2-3 years. However, in 8 months, went up from 100 to 430 and it corrected. Of course, I am holding on to that. I haven't sold mine. I am still holding. I feel that in a few years to come, Hindustan Copper can touch the 4 figure also. NMDC, that also is trading at around 77. 150 may come in that. Sale at 135. It is much more cheaper than JSW Steel if you compare the various factors. So PSU stock, so that's why it has its own troubles. However, the production capacity and everything, if you see, it is almost same as JSW Steel, but much less market cap it is than the leader Tata Steel. And that constitutes 20% of the ETF metal, Mirai Asset Metal ETF. So Tata Steel is the 20% of that. JSW Steel, that's also doing well. I have done videos earlier how to take advantage of the JSW Steel through a discounted holding company. Please watch my videos. So if you are new to this channel, please go and watch my earlier videos which I have done maybe 4 years back. They are still relevant. I had done a video 4 years back on Tata investment and that has gone up from maybe 600 to almost 11,000 last week. So metal cycle is in a very starting stage. It hasn't peaked out yet. It's a cyclical sector. That disadvantage is there, that risk is there, that you need to keep in mind. But however, I feel that metals in the coming days can really do well. So all the metal stocks, including Tata Steel, NMDC, SAIL, Vedanta, where there is a demerger of late, they are all doing well. You can individually buy these stocks or buy the ETF. That is metal, METAL. That's a Mirai Asset Metal ETF. In Zerodha, you can search for metal in watch list and you will get this. It's at 10 rupees, also 10 rupee 20 pies. The day won't be far when we see it at 20. So if you are going to buy individually these stocks, the risk-free one is Tata Steel, because the steel stock, one of the cheapest steel maker in the world, and it's from Tata Staple. So Tata Steel can be bought at this level, which can also do well in the next 2-3 years. So these both ETFs can really create good value for investors in the next 2-3 years. However, cyclical nature sector, there can be reversals in between. There can be corrections. Keep that in mind. And there are many ways by which you can play this metal sector by buying the companies associated with each metal. Let's say manganese, or if you want to look at manganese ore, then MOIL is that, Manganese Ore India Limited. Then GMDC, Gujarat Mineral Development Corporation. Then NMDC, National Mineral Development Corporation. The NMDC Steel, that's another company at 46 also. That also will do well. And you have the precious metals like gold and silver. So I have given a view on Lloyd Enterprise, which is holding company of the Lloyd Group companies, and also they own the first company in private sector which owns a stake in a gold mine. And gold, as you know, it's going up. And my view on gold and silver is always bullish. For last 2 years, you would have seen, if you have seen my old videos, I have been bullish on silver, where I have told that in 2-3 years it can double. And in last 2.5 years, they have doubled. And I still maintain a bullish view on silver. However, since it has gone up so much, so fast, maybe there can be corrections in between. So you should be somewhat moderate in expectations. So I would prefer silver over gold, because when you compare the silver and gold prices, there is a ratio, silver to gold ratio. That ratio also you should keep in mind, almost remains constant throughout the history. So whenever it goes up or down, you can decide which one to buy. However, there is a big technical breakout in silver which happened 2 years back and which is continuing. You can buy gold, silver, buy their ETFs. They are not companies, they are the material itself, metal itself. Then you have Hindustan Zinc. If you want to bet on zinc, it's a Vedanta Group company which will do well. That's on a technical breakout now. I had given my view on the public channel, that has gone up. And then you have manganese ore. For steel, you should have Tata Steel. Then for copper, you have Hindustan Copper. Then you have JSW Group of companies, JSW Steel, Jindal Steel and Power, JSL is are there. All those sort of companies are there. If you want to take a bet on metal, which is risky, which is again I'm written, so don't put all your money in that. Understand the risk before investing in risky sector like this, and be on it. And since it's a ETF, it's a basket of stocks. So your risk is somewhat diversified, or it is reduced or mitigated by investing in a particular instrument, which is a basket. So if something goes down, something else will support by going up. So that advantage also is there. So if you are betting on a sector, ETFs are best way to play that particular sector by investing in that ETF, which diversified ETFs also there. Mid 150Bs, HDFC small cap 200. So these things are also there. That means which contains all sectors. But I prefer investing in ETFs by investing into that particular ETF which focus on one particular sector, so that I can take advantage of that particular sector by investing in one instrument. And whenever I feel that, okay, this is done and dusted with, I need to come out of that with by selling one shot, I can get rid of this thing completely. So I hope you understood and you would appreciate this video. Please go through my old videos where there is always things to learn. Just go through that. That will be helpful for you. In this channel, I'll be giving my videos in English and some other videos in Malayalam also, so that you don't have to do a translation. Thank you very much for watching.
Investing Right. We help you to organize your investments
to save for your retirement life and other major goals. In and out of mutual funds is explained. The taxes associated with them, the importance of taking the fund in the name of your minor child in order to reduce the tax burden, how to invest for your child's education, marriage, how to invest in global companies like Facebook, Google, sitting in India with an ordinary share trading account, how to evaluate a fund, what are the funds selected with such evaluation criteria. We also give an analysis of other products like exchange traded funds, real estate investment trust funds, non-convertible debentures, and stock analysis, especially of holding companies, which holds deep value. No, we don't just cover the definitions, but the in-depth analysis is given, allowing you to take the decisions depending on your risk profile. Share this video with your friends if you find it interesting. Subscribe to our channel. Don't forget to click the bell icon. Come, invest right for a better tomorrow.